Welcome to Budget Barometer as we count down to Union Budget 2017. Every day on Budget Barometer, we measure the sentiment and assess the budget prospects for key sectors in the economy in association with BMR Associates. On the show today, we're very pleased to have Gokul Chaudhri, leader, direct tax, BMR Associates, and our focus is on the energy sector. And yes, that includes a whole lot. Oil and gas, power plus renewable energy. So let's set the ball rolling. Gokul, many thanks for joining us. I'm going to start with my first basic question. When it comes to the energy sector, set the context ahead of the budget. Key progress, key persisting issues.
Well, the good news is that India continues to have a growing demand for energy, which means that there's an opportunity for investment and there's an opportunity for investors to come in. Most estimates say we still have an investment gap of over $200 billion. So there is that space for India to grow with energy. The not so good news is that we still haven't made enough progress on ease of doing business in India to enable this investment gap to be bridged.
Which is why I'm going to dive straight into it because, ease of doing business has so many pieces to it, and we'll keep our focus on what this budget can do, which means diving straight into, what features on the wish list when it comes to the oil and gas sector. First, in the direct tax bucket, Gokul.
In the oil and gas sector, the first big thing that I would really focus on is that if you want to really bring in the new investment, you have to do things which sort of elevate the pain that's being felt by the existing investment and some of the legacy projects and some of the legacy troubles. And that's not the doing of this government, but they have inherited it. And that has to be fixed. So whether it is about the D6 fields to be brought back into production through its development program, whether it's about the tax holiday which was promised to the natural gas explorers, a number of those measures need to happen to give assurance to the investors that this government is going to do things to protect investors.
What out of the list that we're showing our viewers on the screen, Gokul, which has been compiled by BMR and Associates, pressing tax issues on the direct tax front for the oil and gas sector that, should or hopefully will figure in the budget, what out of that list is the most critical one when it comes to the direct tax piece?
I think one of the important things is that we have our upstream sector governed by production sharing contracts. And these are actually signed by the President of India, they're tabled in Parliament, and there's a certain sovereignty to it. Now, as far as this sector is concerned, the concern which is there is that they were committed a tax holiday. Now, we fully recognize that there's a roadmap that the government has rolled out to try and put a sunset to tax holidays. But what happens to those investors who came into production sharing contracts when the tax holidays were promised? Now, the real question is that will they be grandfathered or will they not be grandfathered? When the direct taxes code was being proposed, there was a grandfathering to them. When India renegotiated the Mauritius Treaty, the Singapore Treaty, the existing investors were grandfathered. Now, what is not happening today is that there is no sign of a grandfathering to those production sharing contracts that were signed prior to the government trying to change the rules of the tax laws.
What or how do you rate the prospects of that grandfathering coming through in this budget? And I know that's a tricky one. I'm asking you to rate the probability of that happening.
Well, I think the probability may be low, but what I do hope can happen is that the erstwhile finance minister had committed in Parliament that once the courts rule on a tax holiday for natural gas, this will be given effect through the tax policy and through the tax laws. The Gujarat High Court has given 2 verdicts on this already. And I think one of the easy things for the government now to achieve is fulfill that commitment by at least clarifying that tax holiday will be available to natural gas projects which have already been discovered and put into play. And that tax controversy to be put to bed.
Okay, I'm going to shift a little bit to the indirect tax piece as it applies to the oil and gas sector. What figures high on the priority list there based on what you've put together based on interactions with clients, with industry participants, on the indirect tax front prospects?
Well, the most important indirect tax reform this country is going through is GST.
Of course.
And it's such a pity that we have the petroleum sector outside of it and we have the natural gas industry outside of it. Now, really, when the government did talk about petroleum products being outside of GST, one had in mind some of the transportation fuels like petrol and diesel, etc., which is very much a B2C product. But what we are seeing is that natural gas, which is pretty much an input fuel for power, for fertilizer, this is a B2B product. That's been kept outside of the GST. And I think if there's one thing that the industry would be very pleased with is that the GST Council in the next few months tries and removes this anomaly and enables the natural gas to become a part of the seamless supply chain for GST.
I'm going to take a step back from oil and gas for a moment, Gokul, and just get you to assess what we should really expect on the indirect tax front, given that the GST rollout date is now July. So there's a bit of a misalignment there, leading to some question marks on what should we really expect Arun Jaitley to do on indirect taxes per se, not specific to oil and gas, in this budget?
Well, I think the finance minister has this as a very important budget to put into play a number of aspects which are aligned to GST rollout, but they sit within the framework of the existing legislation. For example, what is he going to be doing in relation to declared goods? And how is he going to deal with those? Insofar as high seas sales, and how does he amend some of the laws in there? So I think there is a number of aspects on indirect taxes that the finance minister still has to deal with. And there are also certain aspects on the custom duty side, which still is a prerogative of the finance minister because that doesn't roll into the GST.
Okay, now we step into the power sector. Broadly, everything is covered by energy, but specifically power. And within that, we have to talk about renewables in greater detail. Again, the direct tax piece as it relates to the power sector. But before we do that, lay the context once again, Gokul.
Well, on the power sector, the good news is that we've been able to attract private investment into solar generation. Not only have we been able to bring in investment to the solar generation, but we've been able to scale it up quite materially during the course of the last 2 years, nearly 150% increase that we're witnessing in the solar generation. And the cost of production in solar has dropped phenomenally. And I think India has contributed materially to that. I think the one big success in the last 12 months has also been that Prime Minister Modi's own interventions, which have led to the International Solar Alliance setting up the headquarters here very much in NCR. And secondly, about India now being a signatory to the COP21 in Paris. So I think renewables certainly has a policy thrust. It certainly is delivering success. Entrepreneurs are being successfully able to build a pipeline of projects, and therefore that ecosystem is really taking off. What we are still struggling with is some of the more traditional projects. And, whether it's in natural gas, where natural gas, again, is not something which has been able to find its way through the regulatory troubles. For example, gas pipelines. Mr. Jaitley promised us 15,000 kilometers of new pipelines to be built in his first budget. We have yet to see material progress on some of those projects. And therefore, the gap in fuel supply for coal, which has been met to some extent, natural gas not so met, and the thrust on renewables being a good one.
And, we broadly outlined what the power and the renewable sector is seeking from Budget 2017. But again, if you had to pick one direct tax piece that is critical and one indirect tax piece, Gokul, which is critical, which you're hoping, fingers doubly crossed, that this budget will deliver, what would you sort of put on the list?
Well, the power sector has had a tax holiday. That's going to go away. That's fair. I think the important thing is, how do you then roll over to the other incentives which are there in the tax laws, which have been provided for the remaining part of the infrastructure sector? Effectively, a higher accelerated depreciation on the capex for that sector, such that they are able to have some sort of a tax incentive still sitting in there for a period of time. But more importantly, I think if the MAT rate is moderated down, that will be significantly an advantage to the infrastructure sector, to general manufacturing and also to the power sector. So I think alongside the finance minister's commitment that he will bring down the corporate tax rate and he's committed to bringing it down to 25%, and he just got this budget and the next one to really to fulfill his commitment. I think if he is able to bring down the MAT rate correspondingly, that will be a great advantage.
Would it be fair to say that that is more likely than not in this budget, Gokul?
That is certainly hopeful.
But I mean, more optimistic hopefulness.
It is because, if you see, corporate tax rates have been going through a downward trend, not just in Asia-Pac, but now in the developed world. I mean, we've seen Britain going down to 20 and then saying 18 and then saying 15%. And this is even before they went into Brexit. And then you have the Republican blueprint, which has been tabled in the US, where they're bringing down the corporate tax rate to between 15 to 20%. Now, Mr. Jaitley has been ahead of the curve insofar as making the commitment to bring down the corporate tax rate to 25%. But I think on the implementation, we have to speed it up.
On that note, and it is quite an optimistic one, I'm going to leave it at that. Gokul Chaudhri, many thanks for your insights. Always value them here on NDTV. Thank you.